It's actually pretty annoying to start building credit when you're young. If you're like me, you might have gone to apply for your first credit card and gotten denied pretty much right off the bat. But that then begs the question, how do I build credit if I don't have any credit history? If you're new to the channel, welcome. My name is Tyler Warlow, and I make videos on self-improvement topics that I wish someone had taught me when I was younger. And in today's video, I'm going to be covering how you can start building credit, especially if you are a young person or have built no credit yet. If that sounds interesting to you, let's go ahead and jump into the video. So first off, let's go over what credit is really quick. Credit is your ability to borrow or to take on debt from people who are going to give you money. That might be credit card companies, that might be a bank, but anyway, having credit is what allows you to take on those loans of money. If you have any sort of credit, you probably have something called a credit score, which is essentially a simple report card for your credit. Think of it this way. If you have a high credit rating, it's like having an A, versus if you have a low credit score, it's like having a D or an F on a test. Now you might be asking yourself, why do I care about my credit score, or why do I want good credit? I'm young, I've got plenty of time to figure this out. And it's essentially going to come down to one thing, and that is the higher your credit score, the cheaper things are going to be. Now I know that might be a little bit surprising, but we can jump into it real quick. Essentially, companies will take a look at your credit score to determine how risky of a borrower you are. Having a low credit score can impact you in several ways. It can impact your car payments, your loan payments by making them more expensive. It can also make your health insurance more expensive. On top of all that, some housing will take a look at your credit score as how likely you are to make sure that you're making your payments on time. And if you have too low of a credit score, then it will disqualify you from getting into that housing. The higher credit score that you can get, the lower interest rates that you can get on loans, so that gives you, of course, lower payments, and then it can help qualify you to get better things like housing. Now, this comes back to the original question. If you are young or have no credit yet, how do you start building it so that you can start qualifying for better credit cards, better terms, everything that we just discussed? Basically, there are going to be two main methods that I recommend. This first method is going to be better for people who are young and maybe not old enough to get their own credit card, but ask a family member that you trust and has their own good credit score whether or not that they can add you as an authorized user on their credit card. What this then does is ties you to their credit score and their credit history. So simply by being an authorized user, you now start building a credit history. And the nice thing about this is because it is tied to the original owner of the card, you actually don't have to do any spending. So this could allow your parents to continue spending their credit card as they normally would and not have to give you a credit card and you risk messing up on your payments or something, while it allows you to continue building your credit score. Now, there is a risk associated with this that if whoever's card it is that you are now an authorized user on starts having trouble on their end, starts missing payments, it will start impacting your credit score as well. So just make sure if you're asking to be an authorized user that you know that they have a good credit history and that they maintain and use their cards or their loans positively. Now, this second method is going to be the approach that I did once I turned 19, and that's going to be simply applying for a secured credit card. A secured credit card is going to be much lower risk to whatever company is going to give it to you, because essentially you're going to give them a set amount of money and they're going to hold that, and that's going to act as your line of credit. So when I got my first credit card, I asked for a student credit card from Discover. They asked me for $500, which then acted as the credit line for the card. So that meant that my limit for spending on the card was $500. I could never take that over $500. So this is especially useful when you're first starting out because it can prevent you from going too crazy. Now, don't get me wrong, for some people $500 is still a lot, so you should pay attention to your spending. But this can give you access to credit and allow you to start building your credit and testing how well you handle it without putting yourself at too much risk. If you go a certain amount of time demonstrating that you're good at managing your payments and you don't miss any payments, a lot of times the credit card company will then upgrade your card so it's no longer a secured credit card and you have a higher line of credit. I would recommend just doing what you already were doing and not increasing your spending on this card. So for me personally, what I did was I applied for my first card when I was 19. And then the only thing that I used that credit card for was for paying for gas and groceries. And at the end of the month, I made sure that I paid that balance off in full. So essentially, I was just using the card to pay for things that I would already be paying for with a debit card, but just making sure that I was then able to build my credit history with it. Now, once you have your first card and you start building your own credit history, there's a few things to keep in mind that will help maximize and increase your credit score as soon as possible. First off, do not miss your payments. Ensure that you are always making the payments on time. And personally, I advise paying off the balance in full. Do not do the minimum payments. If you do any research into this, look at how long it takes people to pay off certain credit card balances if they only do the minimum payment. It takes so much longer because of how high the interest rates are on these cards. So make sure that you pay off those statement balances in full every single month. This is going to be one of the biggest factors for your credit score. It can be up to 35%. So try to make sure you're making those payments on time. I personally set it up so it was automatic and I didn't even have to think about it, so there was no risk of me missing a payment. Next, you want to try and start this as soon as possible because the age of your accounts is something that impacts your credit score. The longer your credit history, the better your credit score will be. Once you're able to start applying to better credit cards, I recommend that you do that. But make sure that you keep the first card that you got open because this is going to be the oldest card and it's going to show the longest credit history. By applying to some different credit cards and maybe getting some loans for either a car or a home at some point, you start to show that you are able to manage different types of credit, and that will also help to increase your score. Now, another big one that's going to impact your score is going to be your utilization. So what is this? Essentially, it's how much of that credit do you regularly use. So when I'm talking about that $500 secured credit card, if you're using all $500 on that secured credit card, then you're doing a 100% utilization. And to credit bureaus, this is seen as fairly risky because they're wondering why you are having to borrow so much money repeatedly. Usually the things that are going to help increase your credit history the fastest is having a utilization of about 10% or lower. So in my case of having the $500 credit line, you would want to only put about $50 a month on that card. I know that might seem challenging, but that can be as simple as getting a tank or two of gas and then don't use the card anymore until the next month. I did all of this starting at the age of 19 because my parents personally had some trouble with credit when they were younger, and so they didn't use it very much. But starting at 19 and implementing these tips is what has allowed me to get to a credit score of 792 today. If you take the time and you're consistent and careful with how you spend your credit, you too can get to that point. But that's going to bring us to the end of today's video. Hopefully you found it to be helpful or informative. If you did, please be sure to leave a like and subscribe to join me along in this self-improvement journey. If you're interested in more videos like this one where I talk about personal finance, be sure to check out this video right here where I talk about how to prepare for the next year. If you're interested in more of my most recent videos, be sure to check out this video right here. But until the next time, this is Tyler Warlow, signing off.